Have you ever heard that bad news is now good news? Well, this is going to be true, especially when it comes to the reversal coming with a lot of gains expected here for AMC stock when, the unexpected happens. Because we just got news as early as this morning around something happening with BlackRock, which I believe is just, a tip of the iceberg around what is going on with major financial firms around the globe, especially here in the US, which ultimately, when you look kind of closely to the big dogs, that are shorting AMC stock, well, we might be in for a treat, guys, because look at this one. BlackRock is now looking at some very, not good things happening for them. BlackRock assets tumbled 16%. 16% as stock and the bond markets slide. All right? The stock and the bond market slide. I want you to highlight the bond market slide just for a second there. Look, BlackRock assets under management fell 16% in the third quarter, along with equity and bond markets as central banks continued raising interest rates to counter surging inflation. The firm oversaw $7.9 trillion out of September 30. This is the lowest since 2020, according to a statement Thursday from the New York-based BlackRock, the world's biggest asset manager. The world's biggest asset manager. Now, for the world's biggest asset manager, 16% might not sound really big for you, but we're talking about trillions of dollars. To put it in perspective, folks, a trillion is 1,000 of billions. So if they are losing 16%, that is hundreds and hundreds of billions. But the reason why they're losing this ton of money is where the catch is really interesting for people holding AMC stock. Look, investors pull money from several BlackRock offerings, including equities and cash management. The core products, known as long-term funds, attracted $65 billion of net inflow, meaning people poured into these funds. All the products that BlackRock is servicing to their clients, $65 billion. But this is a miss compared to the $105 billion in average estimate for analysts is in Bloomberg survey. In the last year's third quarter, the clients put in a net $98 billion, so almost $100 billion into those same investments, all right? So this is a result of both the stock market and the bond market collapsing, all right? Because when the market in stocks or equities are tumbling, meaning people are, putting the money out of the stock market, they're usually putting it into the bond market because of safety. Because with the bonds, it's pretty much like you are kind of lending money to somebody against, an interest that is going to be paid to you on a monthly or daily basis. And right now, people are mostly giving a favorite around the 2 years note, which is now paying you a little bit over 4%. Same thing for the 10 years, all right? So the thing is, usually when the stock market goes bad, the bond market is doing the opposite. But since this whole thing started with COVID, both stock and bond market are collapsing. So people are now withdrawing money both from stocks and from bonds. And BlackRock is suffering a lot because since 2020, which was the lowest the market has been in years and decades, they're now going back to those lower in terms of people giving them money to manage. All right? Now, let me pause there for a second again. If this is happening to a big guy like BlackRock, because BlackRock is the biggest hedge fund, the biggest money manager in the world, all right? And people are afraid of pulling money from them. Not even putting them into bonds, but just holding it into cash because of uncertainty around what is going to come next, especially if the Fed go with a jumbo rate increase next month and in December. If this is happening to a big dog like BlackRock, what do you think is happening with the big dogs involved here shorting AMC stock, like the JP Morgan Chase, the Credit Suisse, even the Citadel, the Susquehanna, the Virtue? What do you think is going to happen to them? Because if the biggest guy is experiencing pain, absolutely and obviously, these other guys, which are kind of little players compared to BlackRock, they are also they're just for sure suffering and experiencing the same pain, but maybe double, maybe triple. All right. Now, the funny thing is, the bond market used to always be one of the ways that the big firms on Wall Street will use as a collateral or even insurance through credit default swap. This is exactly what is happening and causing companies such as big banks such as Credit Suisse and Deutsche Bank to be in financial trouble right now because everything is just tumbling. All right. When everything tumbles, what used to work doesn't work anymore. And with the cost of money increasing, well, it means that there is no place to hide anymore for these guys, including the big dogs such as the Citadel, the Susquehanna, the Virtue, who, by the way, are the biggest shorter of AMC stock. All right. So in other words, in other words, if people are fearing for their money and taking it out of the big pockets of the big folks, well, what do you think is going to happen here? What do you think is going to happen next? The guys that are shorting AMC at some point will definitely feel the crunch to the point where that's it. I just can't because I've went all the way thinking these guys will pull the trigger and get out of this stock, but they're not doing it. Otherwise, this stock would have been trading at zero right now. Otherwise, this would have been trading at zero. But despite the trillions and billions of synthetic, not trillions, but billions of synthetic shares supposedly happening here that they're using to suppress what should happen, what is supposed to happen from happening, is definitely a strong sign to me personally that, hey, it might not sound like it, but something tells me that we are just right there. It's just a matter of that thing, that catalyst that is going to happen, and then boom, everything's going to crumble from their side, and when we rise and go to the moon. So yeah,